Hey, what's up, YouTube? Fritzno's Investing back with another video, and today I'm giving you guys my $62,000 Robinhood Portfolio update. So in today's video, we'll be talking about how my portfolio has been performing. We'll also talk about my greatest performing stock, my worst performing stock, why the stock market has been down a little bit this past week, and then all my dividends for the month of July. So if you haven't done so yet, please don't forget to like, comment, and subscribe to the channel. And with no further ado, let's get right to the video today. So for the day, I was down $1,400. For the past week, I was down $113. For the past 3 months, for the past month, I was actually up $8,047 or 14.73%. Great month. For the past 3 months, I'm only up $1,454. Year to date, I'm down $15,377, and that's because we're in a recession right now. And for the past year, I'm down $4,187. My all-time highs in the portfolio came earlier on this year, right around the new year, I think January the 3rd or the 4th, and the portfolio should have been worth $76,000. But I'm taking advantage of the portfolio right now by buying the stocks while they're cheap, increasing my quantity and increasing the quality of my stocks. So thus far, this has been my greatest performing stock. This is Apple, and you can see its performance. Recently, it was down 24 cents for the day and actually down 44 cents after hours. For the past week, it was up $3.86. For the past month, it was actually up $22 or 15%, which has been great for me. For the past 3 months, it's up $8.89. For the past year, it's up $18.55. And over the last 5 years, it's performed very well, up $125 or 320%. This stock is trading a little bit lower than its all-time highs, which came right around March 30th for $177, and earlier on this year, right around the new year, once again, when it was $182. So I personally think that the stock is at a discount. I'm continuing to add a little bit more shares each day. So my market value has been $14,193. My daily return was negative $58, and my total return has been $5,199, or positive 57%. I own just over 86 shares, and it comprised just over 22% of my portfolio. And my average cost was $104.50. So anytime I'm investing in a stock, I want to make sure that that stock is continuing to produce positive income and positive cash flow. And Apple has been doing that for the most part. We see that their product sales for the 3 months ended in June of 2022 were $63.3 million, which was actually down a little bit. But their services had increased from $17.4 billion up to $19.6 billion. The cost of sales went up. I attribute this to the cost of inflation and also the logistical costs of the increased cost to transport their goods. Our research and development costs also increased. Their net income was down a little bit. I'm not really concerned about that. I think they did have some headwinds from some of their supply constraints. Earnings per share was $1.20, which beat the earnings consensus of $1.16. Their net sales by reportable segment, the Americas was up almost $2 billion. Europe was up around $300 million. Greater China actually decreased by about $100 million. Japan was down about $1 billion. And the rest of the Asian Pacific was up almost $800 million. So I do think that they've done relatively well. On their net sales by category, the iPhone sales were up over $1 billion. The Mac sales were actually down almost $1 billion, so they definitely have some opportunities there. The iPad was down $100 million, and their wearables was down $700 million. I do think they have some definite opportunities in their wearables because these are some of their more cost-effective segments of their business. So they definitely have some opportunities to increase that. But their services was been doing great. They've been slowly increasing their prices of some of their services. Now, I do love that their net assets are $336 billion, and this does outweigh their total liabilities of $278 billion. So I love that about Apple. I think they are going to continue to innovate and release more products that we'll continue to use in the future. So I'm very excited about that, and that's some of the reasons why I love to invest in Apple. So I love being forthright with you guys and give you guys the honest truth. So right now, my worst performing stock has been Lucid Group. Their stock price is right around $18.04 right now. It dropped about $2 as of August 3rd because of their earnings report, which was negative. So that did drop the stock's price a little bit. It was down 11 cents for the past month, down 52 cents for the past 3 months, and down almost $5 over the past year. Their high was almost $50. So this stock is definitely down from their all-time highs. We can see that over the past 5 years. This is a relatively new stock. It came out last year in 2021. It's been up $7.79 according to this chart for the past 5 years. My market value is $902 even. My daily return was negative $26, and my total return has been down $471 or negative 34%. My average cost was $27.47. I own 50 shares, and it comprises just over 1% of my portfolio. I do have this stock queued to sell because I'm not believing in their vision thus far. They haven't sold that many cars, and they're not profitable yet. So I want to put my money in more profitable companies. For the first quarter of 2022, Lucid only delivered 360 EVs, and they were projected to produce between 12,000 and 14,000 EVs for 2022. For the second quarter of 2022, Lucid only delivered 679 cars, so they didn't even double their production from the first quarter. And like I said, they were only expected to build between 12,000 and 14,000 vehicles. They're stating that they have 37,000 reservations, but if they're unable to produce the vehicles to service those reservations, then I don't think that Lucid is a good and positive company to invest in right now. And it states that they were down 12% after hours after that negative news. So I'm just getting out of this company while I can before they suffer greater losses. So this is directly from their investor relations page of Lucid Motors, and we see that for the 3 months ended as of June 30th, 2022, they had lost $559 million from operations. And if we look at the 6 months ended of June 30th, 2022, they had lost over $1.1 billion. So this company is not profitable. They're not producing that many vehicles. So as of right now, I don't think Lucid is a great company to invest in. Next, we'll talk about why the stock market has been down for the past week, and I think this can be attributed to the jobs report. There was 528,000 jobs added in July, which beat the analysts' expectations of around 250,000, and the unemployment rate was 3.5%, which hasn't been that low since before the pandemic. But according to Wall Street, this shows that the Federal Reserve doesn't have high enough interest rates, and they're anticipating higher interest rates of possibly 75 basis points for the month of August. So this is negative news for the stock market. So if interest rates are higher, it's going to cost more money for consumers and businesses to borrow money, and the businesses are going to pass on these costs to the consumer, which is going to make products and services higher, which is going to be bad for the economy. Inflation is at a 4-decade high. There 9.1% reported in June. There is supposed to be CPI data that's supposed to be released next week on August the 10th, which is going to tell us the inflation for the month of July. So Wall Street is anticipating a Federal Reserve rates hike to curb inflation, which is going to be detrimental to the growth of the stock market. So I was reading another article on Morningstar.com, and it talks about how economists are estimating to show inflation to have risen 0.2% in July, meaning an 8.7% inflation rate for the past 12 months ending in July, which would be a 40-year high. So this is the monthly jobs report for the past year, and we can see that from October to February, we were adding around over 600,000 jobs per month, and this kind of fell in March and is slowly kind of creeping back up, which shows the Federal Reserve that we have to continue to crank up those interest rates. So not only did we add more jobs to the economy, we also increased our wage growth. Wage growth of 5 to 6% is consistent with inflation of 3.5 to 4.5%. So the Federal Reserve has a target inflation rate of 2%. And if the inflation was 9.1% as of June, then the Federal Reserve is going to continue to increase those interest rates until it gets down to that target, which is going to be negative for the stock market. So I do anticipate more red days coming ahead, lower stock prices, but also opportunities to increase the quantity of stocks that you may have in your portfolio. So it could get worse for us in the future. So after the news of the jobs report, the S&P 500 dropped 0.1% and the NASDAQ dropped 0.2%, and I had losses of $1,400 in the total value of my portfolio. I do anticipate some more red days coming up ahead, especially if the CPI data is negative. So like I said, I anticipate some red days coming ahead and some buying opportunities possibly, at least for myself. So enough of all the negative news. Next, we'll talk about some more positive news and all the dividends that I received for the month of July. And this is Nike, and for 39% of one share, I received 12 cents as a quarterly dividend. Next up is Coca-Cola, a large beverage company, and for 10% of one share, I was paid 4 cents. This is a quarterly paying stock. Next up, we have NVIDIA, which is a semiconductor company, and for 4.72 shares, I was paid 19 cents. They got to continue to raise that dividend, man. It's too low. So next up, we have Vanguard S&P 500, which tracks the largest 500 stocks in the stock market. And for 80.5 shares, I was paid $1.15. This is a quarterly paying stock. Next up is JEPI, which is a low volatility options ETF, and this company paid me 19 cents for 31% of one share. This company pays monthly. Next is American Tower, which controls cell phone towers, and for 33.5% of one share, I was paid 48 cents on July the 8th. This is a quarterly paying stock. Our next dividend comes from Taiwan Semiconductor Company, which is a semiconductor play, and for 84% of one share, I was paid 31 cents on July the 14th. So this is a quarterly paying stock. Medical Properties Trust is a real estate investment trust, and for 2.8 shares on July the 14th, I was paid 81 cents. This is a quarterly paying stock. Our next dividend comes from Tricon Residential, which is a Canadian REIT, and on July the 15th, for 15% of 1 share, I was paid a robust 1 penny. This is a quarterly paying stock. Next up is Horizon Technology Finance, which is a business development company, and on July the 15th, for 20.5 shares, I was paid $2.05. This is a monthly paying stock. Next up, we have EPR Properties, which is a real estate investment trust, and on July the 15th, for 4 shares, I was paid $1.10. This is a monthly paying stock. Our next stock that we're talking about today is LXP, which is a real estate investment trust, and on July the 15th, for 3.1 shares, I was paid 37 cents. This is a quarterly paying stock. Our next stock for today is Store Capital, which invests in storage containers, and on July the 15th, for 4.9 shares, I was paid $1.89. This is a quarterly paying stock. Our next dividend payer is Stag Industrial, which is a warehouse REIT, and for 44.6 shares on July the 15th, I was paid $5.43. This is a monthly paying dividend stock. Our next dividend stock is Realty Income, which is a real estate investment trust, and for 5.8 shares, I was paid $1.44. This is a monthly paying dividend stock. Next up, we have Main Street Capital, which is a business development company, and for 8 shares, I was paid $1.72. This is a monthly paying stock. Our next stock is Intuit, which operates TurboTax, and on July the 18th, for 40.5% of 1 share, I was paid 28 cents. This is a quarterly paying stock. Our next dividend stock is Prospect Capital, which is a business development company, and for 186.5 shares on July the 20th, I was paid $11.19. This is a monthly paying dividend stock. This is SPHD, which is a low volatility ETF, and for 7 shares, I was paid 98 cents. This is a monthly paying stock. Our next stock for today is New York Mortgage Trust, which is a REIT, and for 11.5 shares, I was paid $1.15. This is a quarterly paying stock. Our next stock for today is XYLD, which is a covered call ETF, and for 1.05 shares on July the 26th, I was paid 46 cents. This is a monthly paying stock. Our next stock for today is QYLD, which is a covered call ETF, which tracks a little bit different stocks than XYLD. And for 63.1 shares, I was paid at $11.41. This is a monthly paying stock. Our next stock for today is Gladstone Commercial, which is a commercial REIT. And for 8 shares, I was paid exactly $1. This is a monthly paying stock. Our next stock for today is Rhythm Capital, which is a real estate investment trust. And for 9.5 shares on July the 29th, I was paid $2.38. This is a quarterly paying dividend stock. Our next stock for today comes from LTC Properties, which is a real estate investment trust. And on July the 29th, for 5.3 shares, I was paid $1.01. This is a monthly paying dividend stock. So comparing this month's dividends versus last year's dividends, this July I was paid $47.24. Last July I was paid $21.06. So that is a 124% year-over-year increase. I'm hoping to increase this to eventually $100 per month. I have a long way to go. So I would love to hear your thoughts. Do you think it's a great idea to continue investing in Apple? And also, do you think it's a great idea to sell my Lucid stocks as it isn't profitable yet? I hope you learned something from the video today. The Federal Reserve wants to decrease inflation, and they're willing to do that by increasing interest rates, but this is bad for the stock market. It's going to lead to a lot of red days in the future. So in my personal opinion, I think it's going to be a great buying opportunity. Please do your hard-earned research so you can invest in great high-quality companies and increase your quantity in them. This has been Fritz Jones Investing with another update. Hope you learned something from the video today. Keep increasing your dividends so that way one day you can retire early. All right, peace out. I'll catch you next time.